2%. But if you really take a look at the 1 week chart for UFlex, it had seen a substantial gain ahead of the results. Also probably, and there you go, you can see the numbers there and the kind of trajectory. And that has a lot to do with the kind of strong performance that the company has really delivered in the last quarter gone by. All right, so strong set of numbers. Let's get chatting with the management of UFlex as well. And we have Sumeet Kumar, who's the Executive Vice President Finance at UFlex, joining in. Sumit, of course, better realizations, product mix, all of them really helped with the profitability and 70 basis points uptick in the EBITDA margins. In the present circumstances, we are more than halfway past this particular quarter. How much of that profitability is looking sustainable?
Yes, good morning, Nisha, and thanks for having me over on your show. In a way, you set the tone for what I'm going to talk about for our very strong Q4 performance. And actually, if you see, before I even discuss the numbers for UFlex for the Q4, to put it in the right context, it's better to also understand the overall challenging backdrop under which we achieved this performance. So for a year as a whole, in fact, a major part of the year was marked by trade-related, tariff-related uncertainties. Against those headwinds, and particularly in the India market, the transition to GST 2.0 had its own impact on the overall demand. And finally, in the Q4, we had this Middle East crisis impacting and disrupting a lot of supply chains. So against this overall very challenging backdrop, I think it is important that we were able to achieve this Q4, a very solid, very strong performance. I think if I ascribe the factors behind this strong performance of Q4, I will highlight three major points before I come to the numbers. So number one, in fact, is that UFlex is a fully integrated packaging majors across the globe with very strong manufacturing footprint across many countries. And this meant that in terms of our supply and delivery capability, and also having this manufacturing footprint across the globe, meant that we were one of the least disrupted players in the industry. And coupled with this improving realizations during the quarter, I think that helped our overall growth, which was 12.8%, very strong sequential quarter growth, and also 5.7% quarter year-on-year growth as compared to the Q4 of last year. This was largely on account of very strong growth in the sales volume of 10.3% on a sequential quarter basis and a 1% on year-on-year basis. Further, in fact, if you drill down this 10.3% volume growth for overall company, we had an 11.4% growth in the packaging film segment, the two major segments being packaging films and packaging business. So 11.4% growth in the packaging films business. And
I'll have to stop you there. Of course, we have the numbers. They've been announced. And yes, there was growth in across all the segments, and there is a fair bit of profitability that is being seen. You spoke about the challenging times. How much of the cost pressure and supply chain constraints is really impacting the company in this particular quarter? Because this quarter, we could see a full quarter of impact of war.
Yes. So, in fact, I will talk about both the quarters coupled together to give you the right perspective about the impact. So during Q4, which is a quarter reported numbers that we're discussing, during the quarter, we saw this increase in the raw material cost, not only being absorbed, passed on to the customer, but we also had the more than corresponding increase in our margin. So we saw during the same time a margin expansion for most of our businesses. That is highlighted by the fact that while on one hand we had 12% growth in the revenues, the top line, we had 300%, we had a 36% increase in the EBITDA numbers. Our margins expanded by 260 basis points on a sequential quarter basis and by 300 basis points on a quarter year-on-year. So you see the EBITDA margin expansion has been the strongest, and in fact, this is the strongest in terms of EBITDA margin for the last 14 quarters for the company. Our aggregate EBITDA of 6,260 million is also the highest EBITDA witnessed in last 14 quarters from Q1 of FY23. So largely, as we see, this Q4 performance has been not only driven by better realization, improved volume, but also in terms of our operational excellence and ability to provide the assured supply to our customers has resulted that we have also been benefited by the higher realization of the market on back of the sales volume, resulting in a much more than corresponding increase in the EBITDA.
All right, so better volumes and most of the industries have seen better demand and better revenue, Sumit, in the last quarter. What I'm asking you is 12.8% margin sustainable in the present quarter? And if not, what are the factors and which segments are getting impacted?
Yes. So on one hand, in fact, if you look at this packaging films business, I think during the quarter, we also seen that the uptrend being moderated. And on overall, for the 12.8% EBITDA margin for the year as a whole, we see that being the base marker for us to continue showing improvement. And we see EBITDA margins definitely improving from the overall basis of 12.8% here on to improve further.
Right. And going forward, any other guidance that you want to give for this particular quarter quickly, Sumit?
In fact, we will look at year as a whole rather than giving any particular guidance for the quarter in the midst of quarter.
Yes.
So year as a whole, we expect that a 70 basis point improvement over the previous year's EBITDA margin, which is 12.8% as a base. EBITDA margins improving from here, and overall revenues where we had last 4 years, if you actually put in perspective, we had a CAGR of close to 15%. If we see that as a CAGR and based on the current visibility, we see any kind of growth in the top line of high single digit or around 10% as the guidance for the revenue for the coming fiscal.
All right. Thank you so much for all the guidance, Sumit. Always a pleasure chatting with you. All the best for this financial year. Thank you.
Thank you so much, Disha. Thank you.
All right. IT sector is our top story today with the kind of downside it is seeing, and IT sector is witnessing a sharp spell of volatility after, remember, a strong recent rally that we had